Hey everybody, welcome back. Hi there. Ed Ponsi here, December 6th, 2016. It's our second session of the day. Getting ready to go. I hope everybody's having a good time out there, getting ready for the holidays. Get a little bit of shopping done, a little bit of shopping here and there. Anyway, boy, I tell you what, people are not shopping at Chipotle. That's one tough enchilada. Look at this. Chipotle closed yet. Look at this. It's jumping off a cliff on the 5-minute chart. And there you can see like it closes at 396. Where's it going to open? 379. You know, I go to Chipotle. I buy the food there. And the lines are so much shorter now than they used to be. This looks like it could break. You had a nice rally here in Chipotle, but you see how this was the area of demarcation, let's call it. Looks like maybe that support level has moved just a little bit. It's very clear. There's a lot of support right here. Okay? And that's going to break at the open. It's going to open here. And, you know, I think from there, there's a good chance it just keeps going down to 360. And bigger picture, could go even lower. So Chipotle, if you're not from the U.S., I don't know if you have Chipotle in your country, but Chipotle is very big in the U.S. It's Mexican food, and it's freshly sourced Mexican food. And the problem that Chipotle has is they had an awful lot of problems with salmonella and other foodborne diseases last year. You see, when you're getting your supplies from all these open sources, everyone says, oh, it's great, you know, free-range chicken and, you know, no antibiotics and this and that. But in order to get that, you have to gather your supplies from a variety of different sources. And if a problem should occur, it becomes very hard to track through all those different sources to find the source of the problem. So the problems kept on popping up, and the stock keeps on dropping. And I think you could see it even lower. I think, you know, gosh, this could be, you know, there's a little bit of support here, but man, it could go a lot lower. So Chipotle's out this morning saying, hey, people haven't come back. And, you know, I can see that because keep the chicken in the cage, says Carlos. I mean, I went there last week. The lines are short. They never used to be short. They used to be incredibly long. And now the lines are short, and they've been short for a year, and the people are just not coming back. So this stock is going to have to go down because, you know, it's just a habit, right? Think of all the habits you've broken in the past. Places you used to eat, people you used to know, websites you used to visit that you don't bother going to anymore. Everything is a series of habits. People broke the Chipotle habit, and now they're not coming back. They should start using blockchain technology. You know, Sandy, I don't even understand blockchain technology yet. Anyway, let's get down to business here. So Euro USD, we did the setup earlier, and it's just kind of hanging there on the 5-minute. We're looking for an entry at 107.20. It's hanging at 107.30. Maybe we're going to get our shot. Who knows? Just keep this in mind, right? No matter what happens, you've got a big situation coming on Tuesday and Thursday rather, and you have to be aware of it. On Thursday, you have to be aware that we're going to hear from Mario Draghi. Mr. Draghi is coming. ECB interest rate decision expected to stay at 0%. Deposit rate expected to remain at negative 0.4. But, you know, it's as always with Draghi and the ECB, it's not the actual event, it's the statement that comes 45 minutes later, generates a tremendous amount of excitement. ECB monetary statement and press conference. So always generates, this is where the volatility comes from. Oh, they should use blockchain technology so they can trace where the produce came from. Okay, that might, you know, they definitely need, because they have all these different sources, places like Chipotle and places like them, like Whole Foods Markets, for example, WFM is another one. Hey, here, come on down. WFM, Whole Foods Markets, I'll show you that one on the daily. It's been showing some signs of life, but not really. If you look back longer term, this has just been dead money for over a year. But they get the same issues from time to time where they really can't, they're having trouble tracing the sources when there is a problem. Luckily for Whole Foods, they haven't had many problems. But the problem with Whole Foods isn't that. It's not that they're having people getting sick. The problem with Whole Foods is 5 years ago, it was the only place you could go to buy all this organic stuff unless you knew of like a special store somewhere. And now you can buy organic groceries in every grocery store. Every single grocery store has them. That makes Whole Foods, let's just say, a little bit less special. And so the stock is going nowhere. Now, one thing I thought could save Whole Foods, they have these big supermarkets, right? They have this plan to open these little stores. And I envision the little stores to be like, they're like little grocery stores, but they also have hot food. You can go there for lunch. It becomes like a Starbucks. They give you Wi-Fi. Instead of getting coffee, you go there and you get some, free range chicken or whatever. You get some delicious salad, whatever. But the problem, now they have this brilliant idea, and it could be awesome. And there are competitors like Trader Joe's is one. It doesn't trade publicly. I can't show you the chart because there is no chart. It doesn't. Trader Joe's is very successful. Whole Foods could just do exactly what Trader Joe's does. They already do. Just do smaller stores, and they would boom. They would be great. So they're rolling the idea out, but they're only opening 5 stores a year. 5 stores a year. What is your problem? Get on your horse. This is the winning idea. Your competitors are not going to stand still and wait for you to get in the game. And this is why this stock stinks, right? Because they just don't get that. Although I got to say, lately, all right, that looks pretty good. And a little bit of a pullback within a move up. But overall, dead money for the last year and a half. All right. Trader Joe's is also very affordable, says Carlos. I like WFM too. Sandy says, I like WFM. I like WFM, the store, but I'm not buying the stock. Trader Joe's is affordable. Whole Foods, some people call it whole paycheck, as in I spent my whole paycheck at Whole Foods. And so it just, right? So that's part of the problem. You got to go in against Trader Joe's and beat them on price, beat them with volume. Instead, Trader Joe's has these little stores all over the place. Whole Foods has these gigantic supermarkets, and frankly, it's not the kind of place you could wander into by accident, right? Whereas if you put it in a mall, if you put it in a strip mall like a Trader Joe's, you could find a lot of people getting turned on to this type of product. And it's just very frustrating to me when I see a company has a winner, they're holding the winning lottery ticket, but they just won't cash it in. And that's really irritating, isn't it? It's pretty irritating. I think Trader Joe's also owns Aldi's. Not sure about that one. I'll tell you what, and I'll move on after this one, but Ruby Tuesday, right? They had an awesome idea for a seafood restaurant, just seafood only. They opened 10 of them, then they switched management, and the new management came in and closed them. Well, the seafood restaurant was amazing. One of them was near where I live. I went there all the time. I was like, wow, this is so much better than like a Red Lobster or one of the things it was competing with. It was just so much better. And what did? They junked the idea. So, they had a winning lottery ticket and they threw it away. And it's just irritating. Okay. All right, let's get back to the euro. Ed, what days do you come on FX Street exactly? I have to dedicate my time to watching all your live seminars. Well, thank you for that. I appreciate that. I need to literally become you now to become a better trader. Well, you can't literally become me. You could figuratively become me, but not literally. That might be uncomfortable for everybody involved. Of course I kid. Listen, here's the situation with FX Street. I've been coming onto FX Street for over 10 years now. And the reason why I've been able to do that, probably for about 12 years, going on 12 years, I would imagine. And the reason I've been able to do that is because my schedule, is very, it's all over the place. I travel a lot. I teach for online trading academy sometimes. And like on weeks when I'm traveling or I'm teaching for OTA, I just can't do these webinars. And but they understand that. And or if I'm just traveling, like I was on an awesome cruise 2 weeks ago, 7-day cruise, and like I just can't do it if I'm doing that. And they understand, and so because they understand, we've been able to keep this going for 12 years. Who knows how much longer, man? I mean, I'll as long as they're willing to facilitate it, I'm willing to keep doing it. So, but yeah, it is all over the place, and I apologize for that. I know it's all over the place, and so it is kind of an irregular schedule. But I will tell you this: when I do teach, generally it's Monday, Tuesday, and Thursday. Okay, generally it's Monday, Tuesday, and Thursday. So if I'm teaching that week, if I'm on that week, if I'm on Monday, I'm probably going to be on Tuesday and Thursday as well. And this week I taught Monday, and I'll be teaching Tuesday and Wednesday. Tuesday and Thursday as well. Okay. All right, just taking a peek here. It's creeping closer to the entry point, but not quite there. I show the low right now at 107.21. So it looks like it missed us by about 2 pips so far. Let's see what happens. Okay. And Lionel, thank you for the kind words. I do appreciate it, and I get what you mean. I get where you're coming from. Okay, Chick-fil-A is the store. I love Chick-fil-A because I have a kid, right? But you can't buy shares in it, and they're not open on Sunday for religious reasons. Well, just imagine how much more money they'd make if they were just open on Sunday. On Sunday this week, I drove into the Chick-fil-A parking lot wanting a salad, one of those grilled chicken over a salad. And I forgot they're closed on Sunday. How much more money they would make if they were open on Sunday? It would be fantastic. And a very kid-friendly place, too. And, some people don't like Chick-fil-A because they say, like, okay, the owner discriminates against gay people. Well, I'll tell you what, that guy died a few years ago. I mean, it's a family-owned business, and I understand, like the guy was, I'm not anti-gay or anything by going to Chick-fil-A. I don't think it means you're anti-gay at all, but, there was a guy who was one of the owners of one of the family, part of the family that owns it, said some anti-gay things, but he doesn't run the place. He died a few years ago, and quite frankly, I'm no expert, but, at my local Chick-fil-A, I'd be shocked if you told me everybody behind the counter is straight. Let's put it that way. So, I don't think they're discriminating. Okay, just my opinion, but I agree. Yeah, Chick-fil-A it's awesome. It really is. Tremendous product. Okay. Okay, back to currencies. It's fun though, isn't it? Let's go. While we're talking about stocks and different things here, I'm going to go to the I'm going to go to the S&P futures. I'm going to see how we're setting up for the day here. 5-minute S&P 500 continuous contract. There you can see us creeping higher as the morning goes along. Little gap up there. Very impressive performance yesterday. They're calling it the Trump rally now. This really gaps here at the election and just never looks back. It's about a 150-point rally on the S&P 500, 140, 150. Pretty impressive rally. Don't know if you can really justify it based on the fact that the U.S. is about to raise interest rates and nobody else among the major economies is considering doing the same thing. That's the trick, right? That's the key. So the dollar should get stronger, but it should also hurt stocks. Wouldn't surprise me a bit if stocks are hurt by this. All right, so anyway, S&P 500. And you can tell, by the way, which part of stock market is doing the best. This is the S&P, right? And now here's the Dow. Are you ready for the Dow? These are the stocks that everyone says are all outdated. Watch this one. Boom, all-time high yesterday, right? The money has gone out. It's what we call sector rotation. Money's coming into this sector. But where is it coming from? It's coming out of tech. Look at tech. doesn't look nearly as good. That's the NASDAQ, right? So a lot of the tech stocks that had been doing well, suddenly they're kind of you know, they're looking a little bit suspect. Like the Clacker, right? Clack, KLA10 core, huge rally, but look how much it's giving back all of a sudden, right? Money's rotating. They're taking profits in these and they're rolling them into things like Caterpillar. You know, there's the cat. You know, the cat is hanging in there, right? And they're buying things like Caterpillar. They're buying things like John Deere, right? Which is symbol DE, right? They're even, let's look at that pennant pattern. That's a continuation on John Deere. Look at that, right? Look at this. And that gap is like your flagpole, and there's your pennant. So this should go higher according to this pattern. It should have a bias toward moving higher. And what are they getting rid of? I think they're working out of stuff like Clack. They're working out of Google. Google doesn't look as good as it did before, does it? It looks like it could be topping, right? Left, head, right. Could be a head and shoulders. How's Amazon looking? Amazon also looks just like Google, man. They're dumping out of this stuff. They're dumping out of the hot stuff like Amazon and Google and Facebook. Look at Facebook. This does not look good at all. Right, gap down, and now the next leg. It's forming a little support level right here. If that breaks, it takes the next leg. Right, so Facebook doesn't look good. Amazon doesn't look good. Google doesn't look good. These are all huge winners, and the money is rotating into the stocks that were the losers, like Caterpillar, Deere. Look at Boeing. Boeing is just going higher and higher, straight up. You know. So anyway, that's the scoop. All right. Okay, so let's get back to currencies. I keep saying that. This time I mean it. Okay, pound yen. We'll take a peek. Things got nasty the other day. We were talking about that pullback to the 10-day moving average, and there was quite a bit of that type of activity going on. Exponential. Moving average. Exponential. Look at that. Pound yen catches it there. If it pulls back, it's a winner. Now, Aussie yen, when we looked at it yesterday, was a huge winner. Right? And that remains the case. Look at that pullback on Aussie yen. Jumps way up, still hanging way up there. So the way you would calculate this now, just so you're aware of how to do this, right? Currently, your stop is based on yesterday's low. We can't move the stop until this candle closes. That's really important to understand. The stop right now is based on yesterday's candle. So how do we figure the stop? Well, the entry was the moving average. The moving average yesterday was 83.93. So that's the moving average, just under 84. The ATR is, right, we go to yesterday's ATR. How much does this move on a given day? That's what ATR tells us. As of yesterday, I'm measuring yesterday's ATR, not today's. As of yesterday, the ATR is 90, so half of 90 is 45. The stop right now is 45 pips under the moving average. So we said the moving average is 83.93. Subtract 45 pips from 93, and that tells you where the moving average is right now. 93 minus 45.
The answer is 48.
Okay, so the stop is now 93.48, right? I'll put that here. 93.48, right? I'm sorry, it should be 83. And it's ruined. Let me get rid of this. Sorry. Just remove. And it's 83.43. 83.43. And we'll make that red. Right? Because that's the stop. which will only to make the entry green, stops red, targets blue. There are no targets in this strategy. The stop right now is here, 83.43, right? But let's say once this candle closes, then we just redo the entire process. Now I got to see what is the moving average. Let's pretend that this candle is closed. We know that it's not closed, and we know that that candle closes when? Well, here on the East Coast of the United States, it closes at 5 p.m. That seems to be the standard closing time for candles. So the moving average yesterday was 83.95. Today it's 84.14. I'm sorry, 84.11. 84.11. Now, if I go down here, the ATR is 86. It's moving 86 pips a day. So half of 86 is 43. So back to the moving average. If the moving average is 84.11, minus 43.
8,368.
83.68. So if this candle were closed, the stop would now move up to 83.68. And that's what you hope to do, is you hope to just keep moving the stop higher. You know that at some point the price is going to break through and it's going to hit your stop. And when that happens, that's when the trade ends, and not until then, right? So that's when the trade ends. It's when the price breaks through and hits the stop. But until then, we just keep raising it. Now, we entered yesterday at 83.95. 83.93 rather. This could still be a loss. The stop is 83.68, but instead of risking 45 pips, it looks now like we're risking 25 pips. So we've cut the risk almost in half. And then we just keep doing this every day. Every day that we're not stopped out, another candle closes and we move the stop. So hopefully that's something we'll just keep doing that in here as long as this trade lasts. Hopefully it'll last. We never know if it's going to last, right? It's impossible to say. All right. So anyway, does Trader Joe's own Aldi's? It's a good question. Not sure. I'll ask. They're opening an Aldi's around the corner from me, so I'm going to have to check it out. Okay. So that's the Aussie yen situation, and we had the same situation on pound yen. Just waiting for a pullback. Swiss yen, CHF. Whoops, there we go. CHF. There you see it pulled back pretty sharply on Swiss yen. Kind of poked through. Might have poked through enough to take out your stop. Well, let's figure it out, right? The entry is 111.59. Can you see in blue? Average exponential, 111.59. That's the entry point. But the low is all the way down at 110.88. The ATR is 111. So it's like a 60 pip. No, it's about a 55 pip stop. That stop is going to be hit. It is going to be hit. And that's the way it goes sometimes. Now, you're saying, Ed, you lose 55 pips on that trade. That's a huge loss. No, it isn't. No, it isn't. Because the size of the trade is always done the same way. You're never risking more than 2% of the account, and that's always the key. So, for example, on this situation, right, on Aussie yen, what's the size of this trade? Well, let's say it's a 50,000 account. Times 0.02, that's 2%, equals max risk. 1,000 is the most I'm allowed to lose on this trade. How many pips from the entry to the stop? Well, initially, right, the initial entry was 83.93, and the stop 43. So it looks like a 50 pip stop. Now remember, this is Aussie yen. This pair does not end in USD. So it's not 10 cents per pip. It's actually about 9 cents per pip. Right? So 50 pips times 9 cents per pip would tell us how much money we would be risking on one mini lot. First, we're going to figure out how much risk per mini lot. Okay, 50 pips times 9 cents per pip. 50 times 0.09.
The answer is 4.5.
The answer is 4.5 according to Siri. That's $4.50. So if I did this trade where I entered here and I put the stop, I entered on the moving average, put the stop at 83.43, then I would be risking $4.50 per micro lot. Now I need to know how many times does $4.50 go into 1,000? 1,000 divided by 4.5.
That would be about 222.2222.
Okay, 222 according to Siri. Right there, I could do this trade with 222 microlots, and my risk would be less than 2%. I could always round that down. Maybe if I'm paying a commission, like for example, FXCM charges a commission, right? So instead of placing the trade at 222, maybe I place it at 220, right? 220 microlots to try to account for the commission. FXCM has a commission structure, but frankly, I like the commission structure better than the just paying the spread, because the spreads are extremely tight on FXCM. This is not an advertisement for FXCM. I do worry about FXCM. I don't have all my money at FXCM. I have money at other brokers as well. But, they are doing some good things. One of them is their model. I would be shocked if Oanda and Gain stick with the market maker model, which has the wider spreads. What they should do is switch to the straight-through processing, or STP model, which has very, very tight spreads plus a commission. You see, having the wider spread makes it much easier for your stop to get hit, especially when the spread widens out at, illiquid times of day. And for that reason, you're better off paying the commission and just having a tiny little spread, because the spread is what really hurts you. I'd rather pay the commission and get the tighter spread. And like I said, I would be shocked if Oanda doesn't follow FXCM's lead in offering that type of product. I do think it's superior. Straight-through processing. Straight-through processing also means that the broker is not on the other side of the trade. Therefore, they cannot widen the spread. They have no means of doing it. Instead, the orders pass directly through the broker with if they are an STP, straight-through processing. The orders pass directly through the broker and into the interbank. Interbank participants are willing to accept those smaller trades because there are so many of them. Okay, and on that note, so now we understand the position sizing for this trade, and on that note, I think we're going to call it, right? Just one last check of Euro USD. I just wanted to see if our little trade executed, and it did not get down to 107.20. I'm showing 107.21.8 as the low. So no dice yet. And just remember, you might not want to leave this in because you have the ECB coming up on Thursday morning. So we've got to be very aware of that. Okay, gang? All right, I'm out of here. Everybody have a wonderful day, and I'll speak to you again on Thursday.